In his latest article that's titled "Trump's New Economist Makes the Case for 20% Tariffs," the Wall Street Journal's Greg Ip takes a look at Trump's pick to lead the Council of Economic Advisors, Stephen Miran, who suggests that the U.S. economy would be better off with higher tariffs, in some cases as high as 50%. Greg joins us right now to talk about this. Greg, this is a paper that Stephen wrote that really kicked off a lot of talk, not just in Washington, but in business circles, too. This idea that higher tariffs could be good for the economy. That's counter to what most economists would tell you when you sit down. This is a paper he wrote before he was tapped in December to come into this Trump administration on this. You walk through a little bit about the optimized tariff policy, what that is, and how he came to some of these thoughts.
Sure. Well, as you know, most economists support free trade and they think tariffs are bad. They support them in narrow circumstances for like national security. But what Steve is saying is a little unusual. He is saying in and of themselves, tariffs in some circumstances can be a good thing. And it's actually not crazy because this is actually grounded in orthodox theory that goes back well over 100 years. But it requires certain conditions to be true. You have to be a big enough buyer of a product that you can more or less impose the price on your trading partner. So let's say you're importing a product and you put on a tariff of $10. Your partner lowers their price by $10 so that your consumers actually don't pay any more. Plus, you get this tariff windfall, and that gives rise to the notion of the optimal tariff. Now, obviously, this is music to Trump's ears because Trump has been hearing from economists all the time, Americans will pay the tariffs, not the foreigners. Here's a guy who comes along and says, actually, maybe the foreigners will pay the tariff. So you can understand why the message that Steve is circulating here resonated with the Trump administration and why some of the views he's putting out there have positioned him well to be an interesting voice in the decision making on things like tariffs.
I want to point out something that you put into your article. You said that Moran's PhD advisors, one of them was David Cutler. He's a Harvard economist who also served in the Clinton administration. He says these aren't crackpot theories, that Stephen Moran is doing this in well-based, fact-determined and research that really goes through all of these things. So this is not just saying what the incoming president wants to hear. These are things that he has thoroughly researched. However, he also points out in his own paper that there's a high risk that these tariffs won't work the way he thinks, too. This is theory at this point, and we're waiting to see how it gets put into action. How did it work last time, 8 years ago, during the Trump administration?
Well, sure. Let's just touch on a few of the ways this could go wrong. First of all, it only works if the prices from tariffs are not passed through to your consumers. But there was a lot of research done in 2018 to suggest, yes, in fact, tariffs were passed through to your consumers. The other thing is if your trading partners retaliate against you, your exporters suffer, and then you do not end up better off. Finally, if you don't actually see your import prices rise, which is what this theory requires, then there's no protection because your consumers have no incentive to switch to domestically made products. So the whole idea of protecting manufacturers with tariffs sort of falls apart. And I think what's important here, Becky, is that Moran understands all these drawbacks, and he sort of draws this more complex picture about how tariffs or the threat or perhaps a negotiation to lower the dollar would be part of a much bigger, almost geopolitical grand bargain where the U.S. says to the world, hey, we've been carrying the load economically and militarily for decades here. We're paying for it with a trade deficit and lost manufacturing. It's time for you to carry your share of the weight. If you don't, we'll hit you with tariffs. We want you to do something about this. That's what I think makes this argument by Steve so interesting, is that it's a way of taking Trump's predisposition to do tariffs and fitting it into the broader picture of, is there a way to do burden sharing with our allies?
And I think the unspoken part of that is also the threat that if you try and retaliate against us, we are no longer going to defend you the way we have in the past, whether that's NATO or any other sort of defense that's built up. So it takes economic warfare and raises it to this level of what happens on the defense side of things, too. So it's pretty complex. A huge chessboard might work.
Yeah, it might work, but I'm just going to touch on this for a second because there's a lot of reasons why it might not work. So, for example, China, China's not going to say, well, you are not going to defend us anyway, so why would we see that as a threat? And moreover, if Trump repeatedly threatens partners and allies, they're probably thinking, well, the defense guarantee doesn't matter anyway. I mean, we heard him in the campaign say that Putin could have his way with countries that don't spend enough money. He signed this U.S.-Mexico-Canada trade agreement in 2018, and he's already talking about violating it by raising tariffs. So I think there's a legitimate question on the part of our trading partners. Would an agreement with Trump actually stand for anything? If it doesn't give him what he wants, will he just go back to threatening us with tariffs and with withdrawing the defense guarantee? And then you're in a world, really, Becky, where I think the whole idea of Western solidarity starts to come into fundamental doubt.
Jan Kniffen, just going back to how this worked 8 years ago. Jan Kniffen, I'm not sure if you're familiar with him, Greg. He's someone we talk to a lot. He's a pretty experienced retail hand who's been doing this a long time and has had high-level positions in lots of companies. He pointed out that the tariffs, at least in some instances, did not get put on to consumers in America because you had factories in places like China that were very worried about losing the U.S. consumer. There was nowhere they could go. So they agreed to eat some of those higher tariffs just to keep the business and keep the factories running. Maybe it's effective to a certain level. Maybe you don't take it if you're actually losing money. But if you can continue your business, I think of it almost like a company like Walmart can squeeze its suppliers to a certain extent, because where are you going to go if you're not selling to Walmart? The U.S. does have some leverage from that perspective.
Yes, it does. And there's a lot of debate about just how much of that actually happened in 2018. There is some evidence that importers ate the tariffs in their margins. There's some evidence that because China lowered its currency, that allowed it to maintain some pricing power and not have to raise the dollar prices of its exports in the U.S. as much. I think that'll be a lot harder to do if it's a 20 or 60% tariff, as Trump has talked about. It'll also be harder for for companies like Walmart to move to a different supplier if every country, including Mexico, is being hit with tariffs. And then finally, there's a point I was making earlier. If you don't actually see prices in the U.S. rise, there's no protection, and the trade deficit will just stay as large as it was before. And isn't that what Trump is trying to get rid of?
Good questions. Let me add one more report. Bloomberg this morning reporting that members of the incoming Trump economic team have been discussing a slow ramp up of these tariffs, maybe going month by month, maybe not dropping 20% or higher on, 50% on, but slowly ramping things up, in part because of concerns about the inflationary impact.
There's a lot of stuff being talked about. I mean, it's a big, it's a big tent around Trump. And Scott Bessent, who will be having his confirmation hearing this week to be Treasury Secretary, has talked in the past about, quote, forward guidance, unquote, in which, yes, exactly that. The United States would raise tariffs by a certain amount every month in an attempt to pressure China or others to come to the table. Howard Lutnick, I think, on this show a few months before the election said that he would not raise tariffs on things that we don't actually make in the United States. So, avocados from Mexico, we don't make that many avocados here. So there's quite a few different ways that those tariffs could be implemented. But, Becky, every one of them has a downside. Trump wants to use tariffs to pay for tax cuts. The more exemptions you make to tariffs, the less money you have to pay for tax cuts.